Hello guys, welcome to another video in this series where we are solving the ISC specimen question paper for Accountancy 2024. In this video, we are going to solve question number 13. If you want to join online classes for a crash course on accountancy, do let me know in the comments box below and do share this video with your friends. If you want to get notified whenever a new video comes in, click on the subscribe button and hit that bell icon. Without further ado, let's get started. This is the cash flow sum and we have the information given. The balance sheet is given of Platinum Limited for the year ended 31st March 23 and 31st March 22. We have some of the basic information given, which is share equity, reserve and surplus, long-term borrowings, where we have 5% debentures, short-term provisions, we have provision for tax. We have property, plant and equipment, cash and bank balances. Under reserve and surplus, we have securities premium and statement of profit and loss. We have share issue expenses, which is there, and we also have machine which is sold. Okay, so let's get started. First calculation generally we do is of net profit before tax. However, we can take a different approach here and do it item by item as we go along. On the share equity capital, we don't have any change here, so nothing comes in the cash flow statement. Reserves and surplus, we have note number 1. Let's go there. We have securities premium, which were 20,000 but not there anymore. So these are used up. And then we have balance in the statement of profit and loss. So we can see that there is a profit during the year, 30,000. So that comes as a part of calculation. So let's do calculation of net profit before tax. Net profit before tax. Okay, the first item that we have is statement balance in the statement of profit and loss. Balance in the statement of profit and loss, which is straightforward 1,30,000 minus 1 lakh. So 30,000 is my net profit. Then we generally add here the transfer to reserve. We don't have anything. Interim dividend, anything we don't have. Provision for proposed dividend also we don't have. However, we have provision for tax, right? And when this is the scenario, what do we do? Which provision do we add? Provision for tax. All right, now as you know the rule, the previous year's provision becomes current year's tax paid, and we add the current year's provision here. So for better understanding, let's write in the bracket current year. Okay, so we will add that, which is 60,000, and we don't have anything else. We don't have any interim dividend or any tax refund, so this becomes our net profit before tax. Okay, so this amount will sit in the cash flow statement at the beginning. Net profit before tax, working note. We write that in the middle column, 90,000. All right, so we are done with reserves and surplus. Only one adjustment is left for securities premium. We'll come to that. Then we have long-term borrowings, 5% debentures, and we have an increase in the value of debentures. The note, we don't have any additional information about debentures. Straight away, we understand that new debentures have been issued. So proceeds from issue of debentures. or rather 5% debentures. All right, straight away that will be 3,50,000 minus 2,60,000. 90,000 worth of debentures have been issued during the year. Now we have the rate of interest also given, 5% debentures. We don't have any information when these debentures are issued. The date of issue is not mentioned. Now we can assume that all these debentures were issued at the beginning of the year. All right. And based on that, we calculate interest on debentures. Add a note, whatever you are assuming. So you can add a note here, assuming debentures were issued at the beginning of the year. In that case, our 5% interest will be charged on the entire 3,50,000. So interest paid on debentures. All right, at the rate 5%. So that will be 3,50,000 into 0.05, 17,500. This becomes part of your non-cash and non-operating item as well. So write down here, after net profit, we have adjustment for non-cash and non-operating items. Add, we have depreciation that we add, that we will be calculating if we have any. Then after that, we can write interest on debentures at the rate 5%. That's coming to 17,500. So we mention that amount. Okay. Interest on debentures sorted. Short-term provisions. We will come to tax paid at the end of operating activities. Next, what do we have? Property, plant and equipment. We have a decrease in value, and the additional information says that there was a sale of machinery at a profit. Let's come to the working notes and prepare the plant and machinery account, the T format, for ease of understanding. Let's do that. Plant and machinery account. Okay, so the first will be to balance PD, which is how much? 7,80,000. Okay, to then we have the balance CD given as well. So let's write that by balance CD, which is 6 lakhs. Okay, then we have information which says sold a machine for 90,000 at a profit of 10,000, right? So machines are sold by bank account for 90,000, so 90,000 at a profit of 10,000, so to PL account, profit of 10,000. Now we have to find the balancing figure. As we can see that this side is 7,90,000, however this side is 6,90,000, right? So the difference is nothing but the depreciation. Okay, so that will be here by depreciation account that is straight away 1 lakh rupees. So if I write 1 lakh, this becomes 7 lakh 90 as well. So this is how we have to calculate depreciation, which is not straight away given in the question. So let's come here and put the figure 1 lakh. After writing the depreciation amount, next we will subtract the profit on sale of machinery, which is 10,000. Profit on sale of machinery that we have, which will be a negative figure of 10,000 that we just now calculated down there. This one. And this bank account, which is 90,000, this will come in the investing activity as proceeds from sale of machinery. Proceeds from sale of machinery, that is 90,000, a positive figure. All right, so we are done with all the items here. We have posted them, all of them. Now we can move on to the next item that we have. Having done this, we have cash and bank balances. We will come to this at the end. Then we have securities premium amount, and that is 20,000. And you can see in the current year there is no premium amount. That means the premium has been used to write off something. What is that? If you see here, we have share issue expenses of 25,000. So out of 25,000, 20,000 has been written off against premium, and remaining 5,000 has been written off against the statement of profit and loss. Let's come here. Here there will be another item that will be added, which will be share issue expenses, which is 5,000 that has been written off against statement of profit and loss. That will be added back because this is also a non-operating item that has been added here under the head extraordinary item. Okay, and this other 25,000 will come to your financing activity here as share issue expenses. This will be a negative 25,000, and even your interest paid on debenture will be a negative figure. It's an outflow of cash. All right, so we are covered with all the adjustments that we have. Let's now start doing the total. There's one more thing which I told you, will come to it at the end, which is this amount, the tax paid, that comes here, less tax paid. The previous year's provision for tax becomes current year's tax paid. So this is also a negative figure. It's an outflow. Or if you're writing the word less, then you may not write the negative figure, because if you use the logic, less and another less becomes positive. So it's up to you. Do the calculation correctly. That's all matters at the end. So let's do the calculation here. This one, if we add this two, we don't have any adjustments for current assets and current liabilities. Under current liabilities, we have just one item, which is provision for tax, and under current assets, only cash we have, so we don't have that adjustment. So straight away, it's a calculation. So let's do the addition here. 2,02,500. This becomes cash from operations, or cash generated from operations, right? After you subtract tax, the amount that you get becomes your net cash from operating activities. So just be careful with the calculation. Tax here will be subtracted. So you're getting 1,77,500. This becomes your cash flow from operating activities. Okay. Under investing, we do not have anything else. So this becomes our calculation, 90,000. The same thing we write here. And we write here cash flow from investing activities. Okay, 90,000, which is a positive figure as well. And here we have the financing activity 47,500. That becomes our cash flow from financing activities. This is a positive figure as well. All right. If you add all these three figures here, these final figures that we got from each one of them, it comes to 3,15,000. That becomes, since it's a positive figure, we mention that as net increase in cash and cash equivalents during the year. Okay, to this we add the opening cash balance or the cash balance at the beginning of the year, which is given in the question as 25,000. To this, if you add both of this, you get 3,40,000. This should tally with the one given in the question, the closing cash balance, and it is matching. We have 3,40,000. Here also we have got 3,40,000. So this becomes cash and cash equivalents at the end of the year. Okay. So in a cash flow sum, you can tally this way, and this is the sum, entire sum that we have got. If you have any questions, do let me know in the comments box below. I'll help you out. We'll catch you all in the next video with another video with the next sum that we have. And do share the sum, share this video as well with your friends who can benefit out of it. Thanks for watching, guys.